Hello, everyone. This is Ty Kiesel from NAV. I'm really excited to be here today. We get to talk about something that is one of my very favorite ways for small business owners to access borrowed capital, the business line of credit. We're going to talk about some of the pros, some of the cons, some of the reasons why I think this is such a perfect vehicle for small business owners to access short-term capital to help them grow their business or meet unexpected emergencies or take advantage of unexpected opportunities. So let's start by talking about what is a line of credit. A line of credit is an incredibly flexible financing option for your business. Basically, it allows you to access funds when you need them, pay them back, and then access them again during the term of your credit line. Banks have been offering lines of credit to small businesses for years. And now, in addition to banks, there are other lenders who specialize in offering lines of credit to small business owners all throughout the United States. So let's talk about some of the pros of a line of credit. You can use the finances that you need. You basically, once you apply for a line of credit, you don't get approved for a term loan. You get approved for a credit line that you can access as you need it. And there are lots of reasons why you might need a line of credit. I can't help but think of years ago, probably 30 years ago. I was not a small business owner at the time. I was an employee, and the guy who owned the business was out of town, goofing off somewhere, and I was left in charge of everything. And we were doing business out of an old home that was probably about 100 years old. We had converted it into our workplace, and we had a toilet backup. And I thought I had fixed it, but I hadn't. It backed up again, and it actually flooded the basement, making what you can only imagine was a huge mess. So I called a plumber. The plumber came out, scoped the pipes, and not only was the house 100 years old, but the plumbing was 100 years old. And we had roots in the plumbing, and somewhere between where the toilet was in the house and the street, the plumbing had broken, and we needed to fix it. Unfortunately, at least where we were doing business, our responsibility was to get the plumbing to the street. And so I couldn't get a hold of my boss, so I had the plumber tear up the parking lot and replace the plumbing and repair the toilet. It was several $1,000s that I committed that I didn't have in my pocket. And my boss, when he came back, accessed his line of credit to pay for it and get it taken care of. So you never know when you're going to need a little bit of extra cash. Maybe it's to, bridge a short season, or to, purchase something that you need that you weren't anticipating, or to take advantage of an opportunity to generate some more cash flow by purchasing inventory. It could be a whole bunch of different things. It could even be a backed up toilet. So a line of credit allows you to use cash when you need it. You only pay for what you use. So let's say you have a $50,000 line of credit and you use $5,000 to fix the plumbing problem that Ty had. You only pay interest on the $5,000 that you use. You don't have to pay interest on the entire credit line unless you use the entire credit line. And I really like that because it allows you to control how much you're paying in interest. And it's also flexible. You can request cash from your line of credit. It can be deposited directly into your bank account. A lot of credit lines allow you to use a credit card situation that draws directly from your line of credit. So it's a very flexible way to provide additional cash to your business. It's also quick. Typically speaking, you would get a line of credit long before you would ever really need to use it, because you're getting it to handle things that crop up, short-term things. And so you can, once you have the line of credit, you can access it almost immediately, often in as little as 24 hours. And it's just a quick way to access a little bit of borrowed capital when you need it. It also helps you build your business credit, because these lenders treat your credit line and how well you pay back the amount of credit that you borrow the same way they would a small business loan. It's reported to the business credit bureaus, and your prompt payments are reported, your good credit behaviors are reported, and it will help you build your credit. It's a good way for young businesses to access credit. Some lines of credit options are available for businesses that are as young as 6 months old. However, be aware that the better your business credit profile, the more likely you are to get approved for a line of credit. Traditionally speaking, a line of credit is a little bit harder to qualify for than a term loan, because the lender is giving you access to borrowed capital at some date in the future, and as opposed to a term loan that is giving you access to capital now based upon your credit profile now, rather than 6 months, a year down the road. So I kind of mentioned earlier, a great use for a line of credit was fixing this plumbing problem that we had in our business. It's also a great way to address seasonal fluctuations. Our business at the time was not what you would consider a seasonal business, but revenues did ebb and flow throughout the course of the year, and we used that line of credit to augment when we were going through a particular ebb in revenues. Let's say that you have a client or clients that take a little bit longer to pay for your products or services than is normal. This is a way to augment that cash flow so that you're not left holding the bag for your expenses and paying your vendors late. It's also a great way to ramp up a new client. I know several businesses that, they'll get a new client. It requires a little bit of capital to ramp up. Maybe they need to hire a new employee. Maybe they need more supplies. It allows you to do that. And it is also a great way to purchase additional equipment or inventory at a reduced cost. For example, many suppliers, and I've experienced this, would call and say, Ty, if you could buy this particular product that you sell a lot of, and you could buy more than your standard order, we can give you a discount of X% if you can do it over the next week. Well, if it's quick turnaround inventory that I'm going to be able to sell, either to I'm either able to share that discount with my customers, or it's an extra discount that I can actually fold into ROI and profits. A line of credit is a great way to do that. Now, there are some cons to consider. Pardon me. There may be an origination fee. Sometimes that's an annual fee. There may be a monthly maintenance fee if you don't use your line of credit. Most lenders would expect that within the first 60 or 90 days, you're going to access your credit line. If you don't, there may be maintenance fees associated with that. Although there are no prepayment penalties, because the goal of the line of credit is for you to access your line, use the borrowed capital, and then pay it back. There's no interest-free grace period like you might enjoy with a credit card. As opposed to a credit card, I like a line of credit. I love credit cards too, by the way, but the balances that you typically would have, that your credit line with a line of credit will typically be greater. So it allows you to make bigger purchases than you would be able to do with most business credit cards. It may take up to a day, depending upon your lender, for the funds that you draw from your line of credit to be deposited into your account so that you can use it. But a 24-hour turnaround is not horrible. Basically, you should be planning ahead. In the case of the plumbing problem that we had in our business, the 24 hours wasn't a big deal because basically the contractor came, fixed the plumbing, then billed us, and then we had, you know, however many days they gave us. I think they gave us 20, 30 days to pay for the plumbing bill. And you're going to want to pay attention to interest rates because not all lines of credit are created equally. Some are a lot more expensive than others, and you want to make sure that you are familiar before you sign on the dotted line that you're comfortable with the interest rates and fees that you're going to be paying. But otherwise, a line of credit is a great way for small businesses to access capital when they need it and have a line of credit available to them so that they're never stuck when they have an unexpected expense come up, whether it be to take advantage of an opportunity to generate more ROI or an emergency like the plumbing emergency that I talked about. Applying for a line of credit will require most businesses to be in business for a couple years. 2 or more is ideal, but there are some credit lines that will go down to as low as 6 months. The shorter your track record, the more expensive the credit line will likely be. So be aware that these are available to businesses with a healthy bottom line that can show a profit and can demonstrate that they have cash flow. Like any small business financing, lenders want to know a couple of things before they'll issue you credit. One is, can you repay the credit line when you use it? In other words, do you have the revenues and the cash flow to make the payments if you use the credit line? And the second one is, will you repay your credit line? And in that regard, they're going to be looking at your credit profile, both your personal and your business credit profile, to make sure that they feel comfortable that you will repay your credit line. Like just about every other financing for small businesses, your personal credit profile, your personal credit score is going to factor in. Many lenders use this as a go, no-go metric for whether or not they are going to offer you a line of credit or not. If your personal credit score is above 650, you're going to be able to get the best rates. Traditionally speaking, a bank or credit union is going to want to see a credit score in the 700 category, but there are really good lines of credit available if you've got 650. If your credit score drops down below 650 into the 600 range, then there's still lines of credit available. You'll still be able to get a reasonably attractive interest rate, but it won't be the same as what you would get if your personal credit history was better. So the longer you've been in business, the better your personal credit score, the better your business credit history, the more attractive the interest rate's going to be when it comes time to apply. They're also going to want to see annual revenues of at least $100,000 every year. So the more revenue you have, the more you're able to answer that first question: can you make periodic payments? Can you repay the credit line should you use it? And obviously, the more revenue that you have, the better that's going to look. They're going to look at your bank statements and potentially your tax returns to verify this. So fudging on the numbers is not a good idea. They will eventually find out what those numbers are. So it's much better to look at the real state of your business than to guess or misrepresent what your numbers are. So for example, if you have 1 month in the last 12 that was a $12,000 month, it's probably not a good idea to say that you're averaging $12,000 every month. If you also have months that are 3,000 or 6,000 or whatever. So, be straightforward with the the lending specialist that you end up talking with, because they're going to be able to put you in the right product based upon your real numbers. And when it goes into underwriting, they're going to be able to look at those numbers and find out. Another thing that you're going to need to have is a business checking account. A lot of these lenders will not even consider your application unless you have a business checking account. And if you were to, and they also like formalized business entities like an LLC or a corporation over uh, over a sole proprietorship. And part of that is because that tells them that your business accounts and your personal accounts are separated and distinct. And it is a great way to demonstrate that you're serious about your business and that you're running the financial side of your business in the proper way. Now, there are two types of lines of credit, and you need to be aware of both of these. There is a secured line of credit and an unsecured line of credit. A secured line of credit, the lender is usually going to place a lien on a specified asset or assets that will secure the funding. You know, it may be real estate, it could be a big piece of equipment. This collateral may help you secure lower rates and higher credit limits. It may even help you find better terms, but you're also encumbering that particular asset or multiple assets, depending upon what the lender uses for collateral. So when you're talking to your lender about the line of credit, you want to make sure you understand if it's a secured line of credit or not. An unsecured line of credit is it's a lot more like a business credit card account. And any line of credit, you'll probably need to offer a personal guarantee, but an unsecured line of credit, you definitely will. Unsecured business locks often cost more than secured financing due to what the lender would consider higher risk, because you're not secured. There is no collateral. Should you fail, there is no asset that they can go after and resell. So when you're looking for a line of credit, you need to know, is it a secured line of credit or an unsecured line of credit? And you should expect that a secured line of credit will include a lower interest rate and more favorable terms. Is a line of credit right for your business? There's a couple questions you need to ask. Do you meet the requirements? Even just the basic requirements that I've just described. Do you fall in that category where your personal credit score is at least 600 or better if possible? Does your business have times when maybe you need a little extra capital? Are there opportunities in the past that you've missed because you haven't been able to respond quickly enough with the capital that you need to take advantage of an opportunity to buy inventory, or maybe fix a piece of equipment that's critical to your operation? And if you're looking for a lump sum of money to drop into a one-time project or a long-term project, a small business loan might be better for that particular use than a line of credit. So you kind of need to look at what your needs are so that you can anticipate whether or not it makes sense to get a line of credit or a term loan. I like to talk about strategic borrowing, and I encourage you to look at your business a couple times a year. Now is a good time. It's mid-year. Look at what the first part of the year did for you. Look at what you anticipate the last part of the year to be, and are there going to be any potential needs for additional capital? I also recommend doing this at the first of the year. Take a look at the year. Look and see what your financial needs are going to be, and if you're going to need to borrow money during the course of the year. And then you can decide, does it make sense to apply for a line of credit? Is that going to meet my needs? Or should I anticipate the need to apply for a small business loan? And so is a line of credit right for you? Pardon me, I can't answer that question for you. I do know that a line of credit is probably one of the more traditional ways businesses have accessed borrowed capital for the last 50 years. But these are questions you need to ask yourself. So, how do you get started? See what line of credit options you currently have. You can go to NAV and we'll be able to tell you. Understand your qualifications and maybe places where you need to improve. And you can look at your potential matches in NAV as your business grows. Maybe a particular type of line of credit is available to you today, but if you work on establishing a stronger business credit profile, you may be able to qualify for a better line of credit down the road. So that's how you get started. I hope this information has been valuable to you. I'm a huge fan of the line of credit and what it can do for your business. And I hope this was helpful. And if you have any questions, please reach out. We would love to answer them for you and help you find the financing that you need.